Everyone, and welcome to the investor presentation of Jet Holdings PLC for FY 26-27 quarter one. When we go through the presentation, if you have any questions, you can put it in the Q&A section, and then after the presentation is over, we will answer all your questions, or you can also ask the questions live after the presentation finishes. With me, we have our Managing Director and Founder, Ilian Gunawardana, and Risna Dilshad, our Finance Director. In the first quarter, the wood coatings, the market share is at 57. It has remained at a steady 57 after the fourth quarter. And in the paints and other accessories, the market share has gone to 7.9%, which is a 1.4% increase from the previous fourth quarter. Brushes, we have increased it by 3% to 32% of the market share. In Bangladesh, we have managed to increase it by 1%, Maldives by 2%. New Zealand, we have not checked it yet, but the 60% we think that we checked before has remained steady at that level. When we look at the highlights of the P&L, our local revenue increased by 8% and the foreign revenue increased by 110%. Right, so overall revenue has an increase of 34%. There's a table onto your right-hand side, right, where we have actually excluded Miraton because when we compare the previous year figures, Miraton New Zealand was not there in the year 2025. So even when you remove that, the foreign revenue has increased by 51%, excluding Miraton. The foreign market GP has increased by 50%, excluding Miraton. So overall, the gross profit of the company has increased overall by 29%. The GP margin has dropped by 2%, mainly due to the prevailing situation where the Middle East crisis has increased the raw material prices because most of our material also are direct derivatives of crude oil, right? So that fluctuation has increased the prices along with the freight prices increasing as well, and the USD depreciating. So the rupee depreciating against the US dollar. When we take the sales and distribution and administration expenditure, there's a 36 and 40% growth. But there too, we have removed in the column on the right, we have removed the Miraton administration and the sales and distribution expenditure. And therefore, once you remove that, there's only an 18% increase. That 18% increase constitutes mainly depreciation of the Volt charge software, which we incorporated last year, right? So the depreciation has hit the P&L, rising transportation costs due to fuel, and also an increased warehousing due to the expansions to the foreign markets. The operating margins also had declined 4%, mainly due to the factors that I said. And also, since we just commenced the New Zealand operation, the New Zealand operation had not yet yielded profit. So that is also one reason why the operating profit margin has dropped down by 4%. The finance cost has reduced to by 71%, mainly due to the exchange gain that we experienced with the rupee depreciating. But that also gives us an advantage since about 35% or 40% comes from foreign revenue. So that had negated that and we had a gain. So with that, there is a finance cost decrease of 71%. Going down, profit before tax, almost the same. Profit after tax is almost the same from the previous year. The margin again of 2%, the decline is again the same reasons that come down from the GP and the operating profits, which come down to the margin of the profit after tax. When we look at our balance sheet, the net asset value per share keeps on increasing. Earnings per share has declined due to the last 12 months compared to the previous 12 months, the profit coming down. But overall, also we had a ESOP, which increased the number of shares. So that is one main reason from 3.57 to 2.9, the earnings per share has come down. The gearing is slightly lower from 21.77 to 19.78, and the market cap has increased to 20.7. In this, another variance that you'd see is intangible assets from 142 has gone up to 776. That is mainly due to the software capitalization of Volt Industrial, that is the Volt Chargers, the software, and also the goodwill arising from mainly the brand acquisition of Miraton. When we look at inventories, again, most of the inventories have increased by about 600 million. So that is due to, compared to last year, the Miraton being consolidated 100%, that is the Miraton New Zealand operation being consolidated 100%, and also having a bit of extra inventory in Sri Lanka to mitigate the supply chain uncertainties. When we look at the macroeconomic factors that influence Sri Lanka, you all know that the LKR depreciated against the US dollar from 311 to about 334. Inflation in the country has risen from 2.2 to 6.8. And the geopolitical risk escalating, the tension in Middle East has increased the global oil prices and disruptions to international shipping routes. The market demand has come down significantly due to all of the above, where the spending power of the consumers in Sri Lanka, we saw a dip in the first quarter of this year, and also manufacturing costs had increased in this quarter. When we look at Bangladesh, though they also experience some of the same macroeconomic factors resulting from the Middle East crisis in Sri Lanka, the same factors that affect Sri Lanka affect them. The political stability, the increased political stability post-election has negated that compared to last year, right? So there's a stronger FX reserves and currency stability has eased sourcing challenges for raw materials, improved import conditions, has reduced the supply side uncertainty for coating manufacturers and for any manufacturer in Bangladesh. Inflation also has moderated during the quarter, and lower cost pressures and better consumer sentiments have supported market demand. Again, I want to emphasize that this, though Bangladesh also had faced the similar issues that Sri Lanka had faced due to macroeconomic ones, the political stability had really overwhelmed that effect and has created a positive effect in the market. So New Zealand is the new market for us, and unfortunately, the global crisis has hit them severely because there's a lot of imports that come to New Zealand from this part of the world, and New Zealand is in one corner of the world. So inflationary pressures increased, driven by higher fuel and energy costs. The fuel cost was almost double during this crisis. So they increased it twofolds during this crisis. Then rising logistics, transport, and production expense pressured manufacturer margins due to this. Then weak economic activity because they were also coming out of a recession, and cautious consumer spending constrained growth in discretionary renovation projects. And there's a sort of a sluggish construction and housing market conditions have limited the demand growth for decorative and wood coatings. If you look at the total Sri Lankan market, the spread, you see wood coatings from 24 to 27, a steady increase. And from the year 24, there's a 20% increase. And from year 26, there's about a 10% increase in the wood coating sector. If you look at the decorative sector, we also said that we are pushing it strongly during this year, and we saw during the fourth quarter of last year as well that this sector really increased from a JAT point of view. So from 203, it has increased to 375, right? Which is almost 175, almost a 80% increase from the last quarter. When I say last quarter, from Q1 of the previous year. Same with the brush segment, right, where we have doubled from QOQ from 59 to 105. The furnishing sector, there's a slight decline, but I will explain it in a further slide, because we have not taken the LCs opened by the clients here. So I'll explain that in the further slides. And when we look at the foreign markets, the purple bar that you see is the existing foreign markets compared to last year, and the blue column that you see of 340 is Millerton. So from 575 million, it has increased to 869 million compared to last year. On top of that, 340 million has been added from the New Zealand acquisition. So that actually increases the total foreign earnings of the company, which also resulted in a exchange gain for us. The final one is the EV charges, 188 million has dropped down to 62 million. I will explain that further also, because we have got a massive order from BYD, which would come into play, excuse me, which would come into play in Q2 and maybe the early part of Q3. So I would explain that further in the other slides. So if we focus on wood coatings in Sri Lanka, we maintained a market leading position with 57% market share. We achieved 8% revenue growth compared to the previous year, same quarter. Then there was a 4% net GP margin reduction, again, mainly due to the price increases as well as the rupee depreciating against the USD. Expanded the customer loyalty base by 8%, strengthening the customer retention and repeat purchases. And also through the binder plant, which we completed the second phase in Q4 of the last year. Now we manufacture the binders for interior wood coatings as well, whereas earlier we were focusing on the exterior coatings. Decorative paints and other products that you see here, once again, you see from 203, 375. So the market share has increased to 7.9 during this period. Revenue increase, QOQ 85%. The product portfolio, if you look, continues to gain strong market acceptance, contributing significantly to the revenue. White by Jet, Walls and Hydro Plus respectively recorded a QOQ revenue growth of 76%, 344% and 213%. And once again, with the binders through the second phase, we are now manufacturing the styrene acrylic binder for wall coatings under White by Jet. The brush and roller segment, again, 78% increase on QOQ. Harris and Brushmaster respectively has a 34% and 49% in the brush category. We maintain the market leadership with an increase of 3%, which is significant compared to the previous quarter. And also the outlet reach. We reached 3,000 plus outlets for the first time, which is a 12% increase compared to the previous quarter. When we look at furnishing, this is what I said that I'll explain in this slide. So though you see 111 and 103, this year there were direct LCs opened by clients, which added about another 60 odd million. So actually the QOQ growth is 64% when you compare apples against apples, but we don't recognize that revenue in our accounts because the client opens the LC directly. but that comes into the profitability part of it, right? So it has been a good quarter in terms of furnishing, though in the accounts that we see this part. So if you really look from the furnishing division, the bottom line has increased significantly compared to the previous QOQ. So we have secured some of the main projects through Open, which we introduced about 2 years back, and the door segment is growing there. We have secured Homelands Greendale, Homeland Skyline, Anantara Kalutara, and Hilton project as well. We have 763 million worth of confirmed projects in the pipeline, and we said that we would focus to the retail sector of the furnishing division this time. So we launched first of its kind loyalty scheme for the Herman Miller customers called HM Circle. So through that, through this loyalty scheme, we are looking at driving sales even further for Herman Miller. And actually, we are looking at this year to be the best year in terms of Herman Miller chair sales for the company. EV charges, this is what I said I would explain. So from 188 million, you only see 62 million, right? But there, if we look at it, we have got another order of 2,000 units from BYD, which amounts to 320 million. And that only we have 85% of this order to be billed in Q2. Mostly, I would say 95% of that 85% will be billed in Q2, and there might be a small spillover to Q3. We have secured orders for installation of EV chargers across another 60 outlets of Keels, where the initial 50 we completed, and that model was where they buy it outright, and there's a revenue sharing for them 87% and for us 12.5%. So we also saw a surge in electric vehicle charging revenue. So we actually changed the model here, and now what we do is for the next 60 outlets, we are investing on the EV charger, and we have changed the sort of dynamic for the revenue sharing model where we would get 85% and they would get 15% on that, right? So we are looking at a payback of less than 24 months for the charger through the revenue from charging. So this is a new model which we are looking with, and Keels is exclusively working with us in their outlets. We also have strategic partnerships for EV charger installations with Barista, Pizza Hut, Cinnamon Hotels, Jetwing Hotels, and Aiken Spence. And our app continues to grow. I think offhand, I remember that we have now about 17,000 users from in the app, and now we have enabled it that if people can see even the other charges through our app, right? So because earlier each app shows only their own charges, but we have developed it to show all the charges so that it actually helps people even more. And there are some exciting new promotions which we are going to do through the app, which you would see in Q2 and Q3. When we look at the foreign markets, Bangladesh, there is one of the best quarters after the political stability. So if you look at the revenue, a 33% growth compared to the previous year quarter, GP a 31% growth compared to the previous year quarter, and overall profit before tax, there is a 92% growth with the margin also increasing by 1%. The industrial segment remains stable, contributing 81% of the total revenue with a growth of 31%. The retail market, which contributes 19%, grew by a staggering 40% this time. Cortex was our low-cost brand, which we introduced to counter a lot of imports in Bangladesh in the retail market. This grew quarter on quarter 61%. And the GP related to ACL, that is Asia Coatings Limited, the GP margin increased by 1%. The other foreign markets, Miraton, New Zealand, The revenue for Q1 FY27 was 1.8. Q1 FY27, Q4 FY26 is 1640. That is the full thing. But there's a growth in Q1 for Miraton New Zealand. There was a loss, right, of about 59,000 New Zealand dollars. So the company was making losses when we acquired it as well. The loss has decreased, but yet since we are actually starting to improve on the management synergies and all of that, I would say it would take another maybe a quarter. The next quarter, we would see a turnaround in Q3, right? So we are excited on that, but mainly New Zealand was badly hit. New Zealand was badly hit by the economic recession, right? So growth of Q1 FY27 against the previous quarter was about 10% there in terms of revenue. But overall, yet there's a loss, but the loss has decreased compared to the previous quarter. Miraton Australia, we're excited to say that we incorporated Miraton in Australia in Q1, and we have set up the facility, and we in fact secured the previous second largest customer of Miraton Australia, that is Total 2Pack. And our local R&D and production, we managed to match the exact standards that were manufactured in Miraton Australia. And we checked the product acceptability with the customers, which they have accepted. And we in Q1, we shipped out the first container from Sri Lanka to Miraton Australia, which was about roughly USD 95,000 from a selling price point in Brisbane. Right. So this is what we sort of stated last time, that what you could expect during this year, right? So in wood coatings, we said that yes, we would face the global supply chain issues. A potential production cost increase could be expected, and we saw a 25% increase in the raw material prices, in most of the raw material prices, resulted in manufacturing cost increasing and all of that. But we also said that as the market leader, we will be able to absorb the impact more with our backward integration and provide our products for competitive prices. So we felt that we could increase the market share compared to other competitors. So though the 25% increase through backward vertical integration and also through value engineering of the R&D, right, we only increased the price by 10%, and we had a hit in the GP of only 2%, right? So that shows the resilience and the robust nature of our operation. So what is expected in the next quarter is revenues are expected to grow, right? But margins are exposed to the global raw material prices, where there could be a fluctuation in the GP. But once again, compared to the competitors, we are confident that in the wood coating sector, where we are the market leader and we are the trendsetter, that we could face this much more successfully than them. In the emulsion sector, we are expecting, where we said in the last quarter, when we said about the total year, that is FY27, we said we are expecting a massive growth in the emulsion sector with the momentum in the last quarter, which could increase the market share by a minimum 2%. So this 2% is what we said, that in the end, in FY27, when it comes to end, that we would increase it by 2%. Already in Q1, in the end of Q1, we have increased our market share by 1.4%. So we are further anticipating in Q2 that the market share is expected to increase even more. Then focused approach to increase sales through the franchise outlets. So sales has increased by 15% QOQ. There is also a very exciting proposition for the franchise outlets that would be started in Q2. So you can expect even more sales from these outlets going forward. And we said that we were going to introduce a heat resistant paint to the market. So that development along with the Japanese technology has been done, right, and completed in Q1. We have also trialed these products and we have seen the results firsthand, right? And we are very excited that in Q2 that the launch of heat block to the industrial market, right, which is the first of the kind developed with Japanese technology, which is a one coat system with an unprecedented heat reduction in this part of the world, right? So with El Nino coming in, right, I think Jet is positioned well to actually market this product and to reap benefits of our R&D and collaboration with another Japanese company. When we look at the brushes, we said that with the weakening competition, we would be able to push for more dominance in the market. So we have increased the market share by 3%, right? And our second biggest competitor actually sold to another company, which is more of an export oriented company. So that also would give us a chance to further increase our market share. It might also give us a chance to speak to the new party who bought the second biggest competitor in the brush segment and strike some sort of a collaboration with them, which would also help us to further increase our hold on the brush sector. Capacity enhancement of the manufacturing plant. The project is underway and additional machinery is being imported. So in Q2, efficiency increase through capacity enhancement of brush handle manufacturing would be seen in the next quarter. Launch of paint accessories, we have finished the testing and we are expected to launch the first phase between Q3 and Q4 of the paint accessories. So this project has been delayed a bit. I think out of all the stuff that we have said, this is the one which we have delayed due to certain price point issues that we are facing. So we had to do certain tests and all to ensure that we enter the market with the correct price point. Furnishing, we said focusing on selling high quality office furniture to increase their contribution to overall sales. Focus will be more tilted towards retail sales, and we have said that there's a massive drive for HM through an exclusive HM circle. So that was launched, and 76% of our total Herman Miller customers have joined the Herman Miller circle. So this would definitely see reap benefits in the future for us. So in Q2, drive further retail sales to the HM circle customers through exclusive benefits. We said that we have a confirmed pipeline of 373 million at the end of last year. This has increased to 760 million by the end of Q1. We have said increasing revenue through outsourcing design services for kitchens and cabinets. So our revenue for that service, which include foreign clients, has increased by 8% QOQ. In the EV sector, we said expanding Jet's own charging network across the country. So currently, 15 fast chargers on top of the Keel's network, which is developed as an investment model, has been done. Exceeding the number of fast charger network by the end of the year, we said over 200 units. So by end of June, a total of 85 fast chargers has been installed across Sri Lanka. By end of Q2, the total network would be over 100 plus fast chargers, and by Q3 this would go to about 150 fast chargers. So we are well on track to have 200 fast chargers installed in the country. In the process, again, we said that in the process of being one of the most prominent suppliers to BYD home charging network with more confirmed orders. So we, like I said in the previous slide, we got another 2000 order, which is about 320 million from JKH. So with that, you would see that revenue coming in Q2 and a little bit of spillover for Q3. What you can expect in Q2 in terms of the EV segment, development of EV chargers for electric three-wheelers and motorcycles. We are also in discussion with one of the most prominent three-wheeler companies who are planning to import very heavily certain electric three-wheelers. So we are speaking to them and collaborating with them on exclusively giving using our electric three-wheeler charger. Then we are also engineering a 200 kilowatt DC fast charger, which we are hoping to launch in Q2. So this would be for your total charge. I think it would take only 6 minutes with a 200 kilowatt charger, right? And also designing of a portable fast charger, right? So what we are trying to look at is, say, while traveling, could you take a portable fast charger with you? Because now the chargers that are there are extremely slow, which that comes with the vehicle. So this is another sort of innovation which we are looking at. Enhancements to the Volt app, including introduction of Volt points, a loyalty scheme, EV hub, and a marketplace to improve customer engagement and overall user experience. Right. So these are some things that we can expect in Q2 from the EV segment. When we look at Bangladesh, we said that performance growth can be expected with the government stability after the election. So like you saw in my previous slides, we achieved a 33% growth in BDT terms. We said capitalization on stability economy after the presidential election, increased GP of products through R&D. So Q1Q, there is a 7% increase for the quarter, sorry, not QOQ. From the previous quarter, that is fourth quarter to this quarter, there's 7% increase, and drive the retail sales through Cortex product range. So a 61% revenue increase in BDT terms for Cortex. What you can expect in Q2, we acquired our own premises to expand the manufacturing and warehouse demands of Bangladesh. So at a sort of a central location, which would help us to be much more competitive. Ensure the newly, okay, so Bangladesh is a pure solvent market, but our biggest customer, we helped him to get a sort of a water-based UV machine line, right? Which we are the agent. So we installed that last year, which I think I briefed you all in this investor conference. So that is fully operational, and they are looking at moving into water-based coatings fully in 2027. And if they, as the leader in Bangladesh furnishing industry, if they move into this sort of segment, right, that would be that the others would follow, which would actually give us even a much more competitive advantage in Bangladesh, right? We are looking at introducing our own wood filler and wood putty for this market, which would be at a higher GP. Launch a one coat product for that market, which we are doing in Moratumulla. That area we have a one coat product. We are looking at taking that into Bangladesh, and commence manufacturing of long oil alkyd resin at the ACL alkyd resin plant. So that's another variant to the manufacturing of our regular um, resin in the Bangladesh plant. When we look at Maldives, we said that there would be a significant sales growth with the new distributor. So we delivered that in Q1. Sales reached 45.8 million, which is a 624% increase compared to the previous one. And in Q2, in Maldives, we are hoping to launch our emulsion range, including the heat resistant product. So that we have never launched emulsion in an extremely strong way in Maldives. So that is also going to happen in Q2. In Kenya, we said capitalize on the foundation set to increase the turnover compared to the previous financial year. We said that the year would end at 300% growth. At the moment, we have a 51% growth compared to the previous corresponding quarter, and we are hopeful that we could reach that 300% growth by the end of the year. Geographical expansions in Q2 you can expect, because we are from Nairobi. We were predominantly in only in Nairobi. Now we are also moving to Mombasa by Q2. In the New Zealand market, we said that we would further capitalize for in the New Zealand market with the synergies. So centralized commercial and HR functions to improve operational efficiency, standardize processes, optimize resource utilization. We have done all of that, but it's a work in progress. But actually, that cannot be seen, the results of that cannot be seen because of the economic downturn there, right? So in Q2, you would see increased collaboration of R&D and technical aspects to further increase market penetration. Then introduction of existing products of JET to the New Zealand market is something which we said that we would do in the year, right? And also including exterior wood coatings under the Miraton brand. So with that, the sample orders have been sent and approved, and we sent the first shipment of these products to New Zealand, right? So in Q2, you would see New Zealand being introduced with brushes and wood putty as the first phase. And developments are underway for the exterior coatings to be launched towards the end of the financial year. Increased profit after tax from New Zealand is what we said. So although the quarter incurred a loss, the QOQ, the loss has decreased, right? Irrespective of the economic conditions worsening. So that also shows that certain of our synergies have actually come into play at the moment, right? So we have budgeted a price increase in July. Also, because in New Zealand, unlike Sri Lanka, you have to give 3 months notice when you increase the prices. So that price increase hits in July. So we hope that our GP would get even more strengthened during this quarter. And we are implementing a fair amount of initiatives to bring down the cost of sales, but that I would say would reflect in probably towards the end of Q3 of this year in New Zealand. Australia, we have divided into two. One is the furnishing sector, because you know that we have a showroom in Perth selling our kitchens and our own cabinetry, which we are doing in Australia. So we said recognized revenue on the orders already confirmed and in transit amounting to AUD 2.7 million. So yes, we have that, but there was a certain unexpected operation issues in this business, which we have resolved now. And in Q2, we hope to come much more stronger in this segment. And I think we are in line to almost meet this AUD 2.7 and even more on on this. But at the moment, this Q1 wasn't the greatest in this business. Then we expect to push the local cabinetry manufacturing more to generate more predominant turnover from this business. So we have increased it by 5%, which is actually much lesser than what we thought. So hopefully we could rectify this and come stronger in this sector, in this market in Q2. Miraton, we said launching Miraton in Queensland, Brisbane, Australia in Q1 and expanding into another state in Q2 and Q3. So the shipment, like I said, has been sent Q1, right? In rupee terms, it's about 31 million. And we have the best part is we have acquired a fair amount of clients to buy these products. So we are quite excited about that. So further, there'll be further clients to be obtained in Q2 with the sales commencing, and two more shipments are planned for Q2 as well. Then introducing the Miraton brand to two markets in the region, that is maybe Southeast Asia or Middle East. So the research and the feasibilities are being carried out. So hopefully in Q2 we could establish at least one more distributor from the two in the Southeast Asian region for Miraton by Q2. So overall in Q2 we hope to because we were Q1 had, I would say, the biggest challenges have overcome now. So we feel that in Q2 that we can capitalize on that having a steady Q1, right? Amidst all of these challenges, I think we have kept it to the same as last year, the bottom line. So we feel that in Q2 we could outdo the previous year Q2 in this year, and Q3 and Q4 hopefully, if this other issues also get sorted, we could really finish off extremely strong. Right. So thank you very much, and we will take any questions if there is.
we can also allow people to speak if they have any questions verbally, if they want to ask, right? They can raise their hand, no, Shalin?
Yeah. So we have
Yeah.
one question. I think someone has called it the El Nino product, right? So, Ilian, I think you can explain the heat block or the El Nino product that we are going to launch.
Yeah, so thank you, Nishal. This is an amazing product. For the first time in the world, a product of this nature has been launched. The resin is a specialized silicon resin. It'll have nano ceramic balloons in it that creates about 7 layers of nano ceramic balloons in the coating. It has a specialized fiber in the product that will help with elasticity of the product. And because of the specialized resin, we can not only give a 12-year warranty on the exterior product, we because of these the solid content of the product, we need only one coat to finish a substrate. So you can apply this on timber, on concrete, on regular wall, on zinc alum roofing, on slate, on tiles. Just one coat completes your job and will reduce the temperature in the building by 20%. So on a regular basis, if your outside temperature is about 30 to 33 degrees, you will have an interior temperature of about 27 degrees is guaranteed. We've already tested it. We've done a lot of proof of concepts at MAs, at Keels outlets, at dialogue, data centers, and so on. We've done a couple of apartments. We've done a couple of projects, buildings, high-rise buildings, and it will be, to us, we believe, to be a extremely good next generation product. It also comes with a dust repellent coating, which once you apply, it's a clear coating. There's no dust or smog that will hold on to the building at all, and your building will continue to look brand new over the 10 to 12-year period. So we believe it not only will save time, it will save energy, it will improve project finishing times, and also bring down the cost to a customer, and therefore become one of the top products in the market.
Thanks, Ilian. There is another question. What are the projections for the bottom line in the next quarter? Do you expect to increase price increases further to ensure margin recovery? Compared to the previous year, we are quite bullish that we would increase the bottom line, the cumulative bottom line by Q2 much more than the previous year, right? So that is the first 6 months of this year would yield a much stronger bottom line than the first 6 months of last year. And we are seeing certain signs of that as well, because with Bangladesh picking up, and also last year, the second quarter, from a Sri Lankan point of view, with the paint segment, there was some hiccups in the last year. So compared to that, I think we are quite confident that we could increase. On your second question in that itself, about the price increases. So at the moment, we are not looking at increasing prices, but we are confident that the absolute GP can be maintained. So maybe we would lose the margin by about 2% or 3. But at this moment, because I feel that the revenue we could pick up and the absolute GPs we could maintain. And at this moment, I also said that the spending power of people are coming down, right? So we have to be sensitive towards that, and see what best could be done. So unless there is a major sort of hiccup in the Middle East situation, I don't think that we would increase the prices, because we feel that the worst effects are already done and dusted in Q1. But there would be certain effects that spill over, which would erode a little bit of our margin, but we hope to catch it up from an absolute GP point of view. And the other thing is, the moment the crude oil comes down, our prices also, the cost also comes down. So we are hopeful that by Q3, that this would settle and we would be back at our regular GPs. There's another question. What proportion of EV revenue is one-off hardware and installation versus recurring charging throughput and network fees? So at the moment, it is 95% of the revenue are from hardware and installations, with only 5% coming in from the EV charging revenue, because with the Keels 50 first, the first 50 chargers with Keels, our revenue share comes in only after 24 months. So that is just starting to come in. And the new installations are being built up. So at one point, because this EV market is quite, yet it is growing and a little bit, we can't really estimate it. I can't give you an exact figure as to next year how this would be, but definitely at one point, your charging revenue, the recurring revenue will be maybe about 30 to 40%, and at a certain point, it can even I mean, it will be about 70% of our total revenue. But unfortunately, I cannot exactly tell when and at what proportions that would happen. But right now, it's 95% uh, one of revenue that we are experiencing. Sorry, another one. Yeah, between your product categories, could you list down from highest? Sorry, 1 minute. Yeah. Between your product categories, could you list down from highest to lowest margin profile of the product categories, trying to understand which product category leads group margins and which ones carry lower margins? So definitely from a product category wise, the wood coatings yield the highest margin for us, right? And then from the paint categories, it would be first wood coatings. Thereafter, emulsion and brushes, right, are coming next. From the overall company point of view, the furnishing projects, because these are projects where, apartment projects and all of that, you cannot keep very high margins on that construction item. So that is the lowest margin driver in the business. That is, the furnishing business yields the smallest margin there. Right. Next one is LIOC. Lanka IOC. Okay. LIOC also planning to establish EV charging stations at its fuel stations within the next 2 years. How does JET plan to face such intense competition? Right. So one thing is, would you go to a place and park your vehicle for 20 minutes and charge without doing anything else? Right. So that's my answer for that. Right. So if you go to Keels, you can charge, you can go and shop, you can do something and you can come. If you go to Baristas, probably you'll have your coffee, you'll have something else and come. So we believe that the fuel stations are not the optimum place to keep an electric vehicle charger. Right. So while, yes, they are yet to, I mean, start and roll it out, right? But by that time, we would have at least about 150 fast chargers in the Keels outlets. We would run certain loyalty schemes. We would build a brand. We would get custom engagement. Our app would be stronger. So I think that's how we would face it. And I don't think that's the ideal place to actually keep a EV charger as well.
And LIOC has taken quotations and proposals from us as well as one of the suppliers.
Yeah. Okay. Next question. Were there any price increases in wood coatings and emulsions in Q1? Yes. Emulsions we increased by 10%, 10% to about 15%. Wood coatings, we didn't increase the price to the consumer, but we stopped certain schemes to the dealer. Right? So overall, say, for example, if there was certain bulk buying schemes and all, we stopped that, but we didn't increase the price in wood coatings for the end consumer. Right. Next question for brushes. What is the combined market share between your company and your nearest major competitor? Yeah, so our market share was 32%. That is Brushmaster and Harris combined. The next, again, offhand, I might be about plus or minus 1% or 2% out here. But Ravi brushes were the next at about 17%. Right, so there was a 15% market share, but I think there was an announcement that Ravi brush, which was Haley, sold out to Bear brushes. Right, so Bear brushes, like I said in the previous, in my other slides also, they are more exporter of other types of brushes, not decorative brushes. So actually, we would also speak to them and see how we could collaborate or what. But anyway, we see an opportunity there, right, to further penetrate this market in that. There's another question into the same question itself. Is there potential for a mutual, sorry, I answered that now, a mutual
And
agreement to de-escalate pricing competition? So that's what we are looking at. And to what extent do imports pose a threat to your domestic position? To be honest, I don't think brushes are imported, right? I think most of the brushes are manufactured here, but in the rollers, there are some sort of cheap rollers that are coming into the market that are being imported. So again, top of my head, from a roller market, I would say we have about maybe again about 35 to 40% market share, and local other products might have about another 20%, and 40% are from the imports for rollers. But brushes, to my knowledge, there are very less import brushes coming into the market. Okay. Uh, Another interesting question: will New Zealand operations break even by Q2? So I would say by Q3, right? We would try our best to break even by Q2, but we feel that we are doing a lot of work with New Zealand, right? A lot of synergies, a lot of economies of scale things are being happening with Sri Lanka, Bangladesh, and New Zealand being combined, right? And a lot of interesting propositions. But what we have to understand is New Zealand, Australia, both, or that mirror tone in that part of the world, we are more interested in sustaining the business and increasing it two, three, four, maybe 10 folds in the long term. So or rather, we are not doing anything that would increase immediate profitability, but harm long-term sustainable growth there, right? So with that being said, we are not looking at over a year or two to break even or something like that. So I would say realistically, I feel it won't be Q2, it would be Q3 is what we are looking at.
but we can state, Nishal, I think between New Zealand and Australia that we'll make a profit at the end of the year.
Yeah, yeah, yeah. Yes. So break even for sure Q3. So that means in Q4,
Yeah.
it goes into the uh, green, right?
Should we mention that we also looked at Ravi, but didn't think that it was worthwhile?
Yeah, yeah. So yeah, when we looked at it, and yeah, the way it was run and all of that, we were not very convinced. So we feel that maybe a distributor model or something else would be better in that sense. Sorry, one more question. Hope the increase in fuel crude oil prices will mainly impact Jet's raw material costs rather than its energy costs. As far as I know, Jet's energy requirements are 100% sourced from solar power. So you are correct. I won't say 100%, but I would say maybe 85 to 90%, and the balance is negligible. So in terms of manufacturing, our energy cost is negligible. So it's only affecting the raw material prices. But the same thing is affecting our competitors as well. Right. So that's all that has been posted in the Q&A section. If anyone has any other question, you could ask or raise your hand in the icon and we could give you a chance.
Uh, can we also state that in the paint industry, and this is something that we state almost every time we have this first quarter presentation, is the first quarter for our industry is the lowest quarter, and you will notice that our projections and our final numbers are much greater. It's not a multiplication of what we achieved in the first quarter that we'll do at the end of the year. So the second, third, and fourth quarters are the far better quarters than the first in this industry due to seasonal demand.
Because December to April, that is and so December, Christmas, January, the New Year, and April, the Sinhalese New Year. So that's why that segment is really sort of seasonal for us. Sorry, one more question was just posted. Krishna, if you could take this, is the Forex gain reported in the quarterly mainly stemming from USD cash reserves held? Krishna, you're on mute.
Yes, it's the cash reserves plus the debtors and the debtor receivables and creditor payables. The net impact is the 56 million.
So I think, again, we having that 35-40% export revenue cushion helps us to, negate this currency fluctuation fairly well. Right. Any more questions? Right. So once again, thank you very much for joining the call, and we hope to see you in the Q2 investor presentation. Thank you very much.
Thank you, Nish.